May profits be upon you. Welcome to another weekly Forex forecast. We're going to take a look at U.S. oil. U.S. oil. We'll take a peek at UK oil, but usually UK oil follows behind WTI crude. Brent oil follows behind WTI crude pretty closely. They correlate positively, so we'll see. We'll take a look at it, a peek at it anyway. But let's take a top-down analysis real quick from the monthly time frame. You can see it's been narrowing, and we got this thing going on here, right? A equilateral triangle, or a bull flag, or whatever you want to call it, a wedge. All right, but usually with these kind of uh, what do you call it, formations, it, you wait for things to whittle down, compress, and then boom or boom, one or the other, one way or the other. That's not the way I trade. I do not trade that way. It works for some, and but that's the way they don't want to do it. This is the way I look at it. I look at it and look for uh, first fair value gaps in when price is consolidating like it is here. Sorry, like it is here, right? When it's consolidating like that, I don't look for those same fair value gaps. All right, positive, bullish or bearish. Why? Because they get disrespected in consolidations. You see this one here? That's a bearish fair value gap. What happened? It got disrespected. You see this one here? It's a bullish fair value gap. What happened? Price just disrespected it. All right, that's what I look at. You don't look. You don't try and gather that kind of information from a consolidation. What you look is the range. All right. What you look at is ranges. All right. You see this swing low to that swing high. This is a trading range. Okay. And what I look for is if price breaks out to the upside, then I'm looking for a retracement back below the 50% of that range. All right. Into what is called discount from premium. Above the 50% of the trading range is premium prices, where you want to take your shorts. Below the 50% of a trading range is discount. And that's where you want to take your longs from. Got it? Good. All right. In this sense, over here, price is compressing here. But what I notice is lower low. I mean, this swing high to this swing low to that lower high to this lower low. These are ranges, all right, and they are heading downward. I am bearish, all right. If we look on the weekly, if we're bearish on the monthly, we got to look on the weekly, and we got to see what the details are. Right below this low is the most recent and most significant break of market structure. It's a bearish one. If it's bearish, that means I'm automatically uh, bearish in this market, even though it's pushing up. Why is it pushing up here? Because after every impulsive move comes the opposite and opposing retracement. All right, but that doesn't mean that it's going to continue. It's creating a trend, a lower low, a lower high, and you expect a lower low to happen. All right. Below that low, it becomes a lower low and you stay bearish. But what happens when price takes out that high? Then we become bullish. You understand? That's the way. That's the way you want to look at your market. And in this sense, we wait until the retracement is over when it starts to push up after breaking market structure to the downside. We wait for that retracement to take place. We wait for that. You can trade this, of course, all the way up. Sure. All right. But we know that if it's going to continue lower low, lower high, lower low, then you want to look for a price to find the end to that retracement, and this signified that end. So uh, I am still bearish. We did not take out that high, and we're heading towards this low. All right. I am still bearish. Got it? I hope you do. If you have any questions, leave it in the comment section. Let's go to the daily. This is where the uh, rubber hits the road. All right. You see the bearish break of market structure. You see the pullback. All right. The retracement. All right. Towards that high. All right. The high of this range. Remember, we're looking at ranges. This is the range. All right. There's the 50%. Price pulled up into premium. All right. You look for your bearish setups in premium so you can take it down to what? That low. So you can break that low so that you can have a lower low. This is the lower high. It isn't a lower high until it breaks that low, but it looks like it's forming. I hope you're sticking with me on this. I hope you're keeping up with me. But what we want to find here is, how do we know this latest pullback, is going up? Well, look at this. We got, I'll spread this out for you so you can see it. All right. Look at this high to this low to that high to that low to that high. Now, what do we got here? It looks like price uh, made that pullback. We were waiting for it to end. This is the structure that says, hey, this pullback is over. Right? And we're about to resume right here. Right? I want you to see it. My price broke that low right there. All right, and went past it. We have a bearish break of market structure, and you're waiting for price to pull back up into what? This is the new range. From that swing high to this swing low. This is the new range, divided in the upper half and the lower half. Premium discount. Are you following me? All right. That's how the ranges work. All right. It's a fractal situation. What you see on the higher time frames, you're going to see on the lower time frames. Lower low, lower high, lower low, lower high. You're going to see that in every time frame. You got it here. Okay. Price pulled back up above the 50% into uh, premium prices here. And you can see, matter of fact, let me show you on a Fibonacci retracement tool. We'll go right to here, right? Slide this on over so you can see the numbers a little bit more clearly. And you see that we have uh, peaked above the 50%, peaked above it higher, took that high out. All right, we're on a daily. All right, Thursday's candle has a nice size wick on it. All right, and then you have this candle here. Now I'm about to give you another lesson. What's an inside bar? This is an inside bar. An inside bar is when the most current candle, if I can just draw it right, this candle did not go past, the Friday candle did not go past the high or low of Thursday's candle. It's inside the range of this candle. Okay. What does that usually mean? Inside bars usually show themselves when the market is about to change direction. Is it 100% of the time? No, high percentage, 70 to 80% of the time, I would say. At least 75. All right. And you have an example right here. All right. That candle is within the top and bottom of the previous candle. And you can see our price was heading up and it was headed down. All right. How about another example? All right, right here. See that white candle here? That's an inside candle. Doesn't exceed the high or low of the previous candle. What happens? Price was heading down, and then all of a sudden we start turning up. Okay. All right. We have any more examples? Well, right here. Our price was going up, and then all of a sudden we turned down. This one too. All right. I mean, you could see it. You can see that it's there for you if you're looking for it. What all of that? All right. Anyway, that's a good example. So, what I'm looking for now is for price to turn around. I'm looking for it. I'm not expecting it. All right. I'm looking for it. All right. Because when you have expectations, you can open yourself up to disappointment. So, what I'm looking for is how do I know the next candles is going to start showing downward price action? All right. Some bearish price action. I don't know, but I'm going to look inside this wick. All right. On the lower time frames, you're going to go only one time frame down, and I'm talking about from daily. You're going to go to the 4 hour. All right. Inside this wick, what am I looking for? There's a lot of bearish pressure there, right? What some people would call bearish pressure. I don't believe in the pressure up or down. It's just that you have the bears are defending from the bulls taking price higher here. All right. Did it leave fair value gaps? Let's look at the 4 hour to find out. All right. Let me get rid of that. This is that wick right here. Okay. And what do I see? What do you see? Bearish fair value gaps. What does that mean? In this context, I want you to bear witness. All right. You see a bearish fair value gap here, a bearish fair value gap here. Price disrespected this one. And looks like we get a close above this one. That's bullish qualities. All right. If the bearish fair value gaps are not being respected, the price looks like it's bullish. But does this look impulsive to you? Hmm. This is an order block. All right. We know it's a valid order block because it displaced price once it moved away from the bottom of this uh, bullish candle. It displaced and left fair value gaps, which is how you define displacement. There has to be some fair value gaps left behind. That's how you know an order block is valid or not. If price takes out this order block, then I know, if we get a close past the means threshold. There's a little dotted line going through this daily fair value gap. If it goes past the mean threshold, the 50%, the halfway mark of this bearish fair value gap, then we know that there's a good chance price is going to continue higher. All right. That's what we're going to look out for. All right. Uh, but we're going to start with this bearish fair value gap. I mean, this bearish order block here. You see that little eye? I'm keeping an eye on this, and I want to show you something. Look at that. What is there anything special about that that candle? I just showed you. It's an inside bar, man. Didn't go past the high or low of the previous candle. What does that mean? This usually shows up when price is about to change direction. So I am looking for that bearish price action to come. All right. If it doesn't, and we get a close past this high and past the mean threshold of the fair value gap, then we know that price is probably going to be going higher. All right. All right. So let's go back to the daily. I want to show you one other thing. I just had it in my head. Oh my goodness. You see, you see this here? This is a volume imbalance. It doesn't always push price away. It doesn't always defend price. Some people treat it like a fair value gap. I do not. Sometimes it will give a reaction to price. Sometimes it may give a reversal. There's a few and far between, but most of the time it gives a reaction. But that's not what I wanted to show you. What I wanted to show you was, uh, uh, yeah, this is where the bearish fair value gap, the bearish order block, which is this displacement, which this displacement validates. This is where, if we see a price closing past this, there's a good chance that this fair value gap will fail, and uh, that price is probably going to go higher. Think about the geopolitical situation. All right, oil wasn't moved to by much by the retaliation of the Israelis against the Hezbollah and Hamas and the rest of them. This isn't a it didn't move that much. So maybe we won't get the big spike that some were saying were coming because of the crisis over there in the Middle East. So I'm thinking that we have some reasoning for price fundamentally to maybe turn bearish. We could see it move sideways, but I'm looking for a bearish reaction here. Anyway, that's it. I hope you enjoyed this my forecast for oil. Make sure you check frequently throughout the week in the comment section because I always leave updates, and I hope that you check those out as well. I will see you in the next video. Oh yeah, I did promise you a peek at UK oil. All right, I just moved to UK oil, and we have the same situation, same kind of price action. All right, you see that big wick, you see the inside bar. All right, on the 4 hour, it's going to look exactly the same setup. We have the order block outline. You see price going up into that order block. You see how price gave that doji candle. It's an indecisive candle, but it did take the high, unlike US oil. It did take the high. This is not an inside bar, but it is a doji candle. So uh, I'm looking for the same kind of price action of, where price starts to round over and maybe back down. There is a bullish order block here that price could react to, but what I'm looking for is the same price action that we saw on WTI crude. Okay, same deal. This is that volume imbalance, but I'm thinking that we're going to see the same deal here. So we're going to watch that order block very closely to see if price takes out that top. Right. Thank you for watching again. I'll see you in the next video.